commence the event. Thank you very much.
안녕하십니까.
Good afternoon, ladies and gentlemen. Welcome to the 2025 BOK-KIF Joint Conference. This is Lee Seung-yeop from the Market Research Team at the Financial Market Bureau of BOK. The BOK and the KIF are co-hosting today's conference on the policy challenges for the development of the short-term financial market and the activation of KOFR. There are two sessions in this conference, consisting of 3 presentations as well as a panel discussion with experts on the topic of KOFR activation. I would like to ask everyone for joining us today despite your busy schedule, and I would like to ask for your attention and interest until the end of the program. And now, let me invite Governor Chang-Yong of the Bank of Korea to deliver his opening remarks as a way of declaring open today's event. Thank you.
Good afternoon, distinguished guests. It is my great pleasure to welcome all of you to the joint conference hosted by the Bank of Korea and the Korea Institute of Finance entitled Policy Challenges for the Development of the Short-Term Money Market and the Activation of KOFR. Firstly, this topic has been led by Vice Chairman Dae-Yong of the Financial Services Commission, who's been leading this effort, and also President Hang-Yong of the Korea Institute of Finance for his active initiative in organizing this event. I would also like to extend my special thanks to all the presenters, panelists, moderators, and participants joining us today. At today's conference, we aim to engage in broad discussions on the development of the short-term money market, including strategies for expanding the use of KOFR, improving the institutional framework of the repo market, and enhancing the role of the BOK's open market operations. At the same venue in August last year, we shared the experiences of major economies in transitioning their benchmark interest rates and recognized the need to promote the activation of Korea's risk-free benchmark rate, the KOFR, and pledged to pursue this policy goal proactively. In line with that commitment, the financial authorities of various institutions across the market have worked together to steadily establish the institutional and technical infrastructure centering around FSC, while also implementing comprehensive strategies to expand KOFR-based transactions. I've been briefed on the progress continuously, and also stakeholders from the financial private sector have been working very hard, and thanks to the concerted efforts of many institutions, we have witnessed remarkable progress in just 1 year. The trading volume of KOFR-based OIS has increased by about 70 times, and the issuance of KOFR FRNs has more than tripled. Such a positive transformation would not have been possible without the active dialogue and policy cooperation of market participants. I extend my sincere gratitude and ask for your continued support in further promoting KOFR trading. In particular, just last week, central clearing for KOFR OIS transactions was launched at the Korea Exchange, a major milestone that alleviates the burden of many constitutions in managing the associated risks of KOFR trading. I would like to take this opportunity to express my deep gratitude to everyone at the Korea Exchange who contributed to making CCP possible. Now that the necessary infrastructure for KOFR transactions is firmly in place, I believe the next challenges are translating our ideas into action, and we must accelerate the implementation of the KOFR expansion strategy and also deal with various overlap issues with the CD rate, so that market participants can also trade with greater confidence. And it is important to present a clear timeline for the policy and concrete action plans. I hope that today's discussions will yield practical solutions to enhance both the speed and credibility of this transition. Korea's short-term money market has made remarkable progress over the past decade, particularly around the repo market. The volume of interinstitutional RP transactions has grown rapidly, and efficiency has been enhanced through mechanisms such as foreign currency funding secured by Korean won-denominated bonds, enabling the production of a robust, reliable risk-free rate. At the same time, however, the growing use of leverage through the RP market has raised potential risks. The soundness of the RP market forms the very foundation of stability for the entire financial system. And I hope today's conference will serve as a venue to take an objective look at the current state of the RP market and explore the directions for policy and institutional improvements. Meanwhile, the increasing influence of NBFI in the short-term money market has become a key topic of concern globally. While their growth contributes to greater competition and also liquidity in the financial market on one side, it also brings complexities in market behavior and amplifies potential risks, making policy responses more challenging as we have a more diverse composition of the market participants and more complex behaviors in responding to economic shocks. And in response, central banks around the world are therefore considering ways to incorporate these structural changes into their policy design and frameworks. And I believe that it is very timely that we engage in such discussion. And in this regard, the BOK has recently reformed its open market operation framework by newly including asset managers and non-bank deposit-taking institutions as eligible counterparties, and by introducing two-way RP operations to better respond to liquidity imbalances. And as a matter of fact, you are probably aware of the restructuring papers, but we have also been making a lot of progress in developing our financial market. And in line with this, we believe that the market will be moving in the right direction, and we're very proud to say that. Going forward as well, the BOK will continue to reflect on how open market operations can maintain their effectiveness, efficiency, and reciprocity amid rapid market changes, while contributing to the stable development of the short-term money market. And in April next year, we'll be included in WICB, and a massive amount of foreign capital will be flowing into the Korean market. In order to translate such expectations into reality, the short-term money market will have to play a pivotal role so that we can further advance and sophisticate our financial market. And I believe that this conference will play a pivotal role in internationalizing the financial market and also induce more capital from overseas into the domestic market. I sincerely hope that today's conference will serve as a very important venue for all of you. Thank you very much.
님, 이어서
Thank you very much, Governor. And now, let me invite the co-host of today's event, President Hang-Yong of the Korea Institute of Finance. Please welcome him with a big round of applause. Good afternoon, ladies and gentlemen. Thank you very much for joining us at this BOK and KIF joint conference on the policy challenges for the development of the short-term financial market and the activation of KOFR. And in particular, I would like to thank Governor Chang-Yong and also Vice Chairman Dae-Yong of the Financial Services Commission for delivering the opening remarks and also for enabling today's conference. As you are aware, the core objective of the global financial benchmark rate reform that followed the 2012 LIBOR scandal was to restore confidence in benchmark rates by calculating rates based on sufficient actual transaction data. The discontinuation of LIBOR, which had failed to strengthen its transaction data foundation, accelerated the transition to a risk-free benchmark rate, with major countries now entering the final stages of this shift. The forced discontinuation of LIBOR, once dubbed the world's most important number due to its trillions of dollars in linked global financial assets, served as a powerful catalyst. It compelled policymakers and market participants to unite and achieve this massive systemic transition. Korea is also fully aware of the problems with the existing CD benchmark and has long discussed benchmark rate reform. For Korea, transition to a risk-free benchmark is perhaps an even more difficult challenge, as there is no motivation like the termination of LIBOR. This is because transitioning the benchmark involves the very difficult task of migrating existing contracts and fundamentally changing trading practices. Even if a better alternative benchmark exists, it is difficult to voluntarily engage in new transactions when liquidity has not yet been established. Therefore, the FSB has emphasized the role of the public sector in the transition to risk-free benchmarks, and many global public institutions have emphasized the necessity of close public-private cooperation. In this regard, I appreciate the leadership of the financial authorities and the BOK. I thank them for their push for the adoption of KOFR since last year by presenting a clear roadmap, and I also appreciate the dedication of the market participants and their response to this initiative. Korea's repo market is raising its profile as the market where the KOFR rate is calculated. Therefore, the repo market must always be managed with the utmost care to ensure the transparency and reliability of the benchmark rate. Korea's repo market is the center of short-term funding in the financial sector, primarily involving banks and non-banks. And personally, in 2012, when the short-term financial team was starting out, and the Financial Service Commission was starting, then now at that time the repo market was quite small, but now we see that it has grown considerably. The repo market connects various financial sectors through securities collateral, making it highly interconnected with other markets and thus critically important for financial stability. Not only that, it holds significant implications regarding the transmission of monetary policy. Today's environment, marked by external uncertainties and growing importance of financial stability, demands greater resilience from the repo market than ever before. As such, identifying and addressing the issues in Korea's repo market and enhancing its quality is an essential task. And that is why I believe today's conference, themed Policy Challenges for the Development of the Short-Term Money Market and the Activation of KOFR, is both timely and crucial. We need to heighten the market's understanding of the necessary initiatives and progress toward KOFR, share our objectives, and deliberate on the dissemination strategy. At the same time, by identifying challenges in the repo market, which forms the basis of KOFR, and planning for improvement, we hope to promote the long-term stability of the financial market and support the activation of KOFR. Today's conference aims to gather insights and wisdom from experts from diverse fields. We hope it will serve as a meaningful forum for in-depth discussion that can contribute to continued development of Korea's short-term financial market and a smooth transition to risk-free benchmark. Finally, I would like to once again express my deepest gratitude to everyone for joining us here today. Thank you very much.
Thank you very much, President. Last but not least, we're going to invite Mr. Dae-Yong, Vice Chairman of the Financial Services Commission, for his congratulatory remarks. Please welcome him with a round of applause. Thank you very much. It's a pleasure to meet you all. I'm Dae-Yong, Vice Chairman of the Financial Services Commission. I'm pleased to join you today at this forum for discussing the development of the short-term money market and the promotion of KOFR adoption. This is a very important infrastructure, and it also has large implications to the market. It really requires expertise of financial sector participants, and I'm very glad to be part of this event. I'd like to thank BOK Governor RHEE and KIF President Lee. Thank you very much to our two co-hosts and other participants for their time today. There's a lot of discussion underway, but we have to look at the speed and also the direction of the benchmark rate transition today. Because the benchmark rates we discussed today form the core infrastructure of financial markets. They serve as a foundation for countless financial transactions, determine the flow of funds and the pricing of risks, and mark the starting point of market confidence. And benchmark rates should be calculated in a transparent, fair manner so that the funds can be allocated efficiently. As we saw in the 2012 LIBOR manipulation scandal, when confidence in benchmark rates is undermined, its repercussions spread throughout the entire financial market and ultimately harming financial consumers. In this regard, the government, the BOK, and the financial industry have been making concerted efforts to promote the adoption of KOFR thus far, and this carries great significance. Thanks to your interest as well as efforts, we have seen the improvement in infrastructure, And also, KOFR is being used more widely in the derivatives and bond market. So what to do going forward? Of course, building upon these achievements, we plan to push forward the benchmark rate reform in a consistent and timely manner. This reform effort will aim to rapidly enhance the credibility of benchmark rates while minimizing the shocks to the market during its transition process, and most of all, ensuring that the benefits ultimately reach financial consumers. Let me touch upon three factors. This is the direction that we must move forward. First of all, the use of KOFR is already fast spreading in the derivatives and bond market, and we need to accelerate its wide adoption because central clearing services began at the end of October this year. So for the transition, we will set ambitious usage targets and strengthen institutional incentives for market participants. Second is a very challenging one. In the loan market as well, we will have to work to develop a phased plan for the introduction of KOFR. Since benchmark rates applied to loan products are directly related to the borrower's debt service capacity and burdens, the interests of financial consumers and market stability will have to be considered as our top priorities. And we have to strike a very fine balance and prepare measures for its introduction in a thorough manner. Last but not least, in relation to the reliability of the CD rates, we have to accelerate the reform process to replace the CD rate. The quote-based CD rate carries risks that are similar to those of LIBOR, which led to the manipulation scandals in 2012. Therefore, market participants themselves need to work to gradually reduce their use of the CD rate. Now, regarding the three tasks that I've spoken thus far, the government as well as the BOK, the FSS, will be working together to establish detailed benchmark rate reform plans. And I think that that should be the way forward for these different organizations. As you understand, just before the 2008 global financial crisis, this person from the Citigroup said that as long as the music is playing, you've got to get up and dance. We're still dancing. However, when that music actually stopped, what remained in the market were enormous after effects and deep scars. We could also be in that situation or could face a similar situation regarding our benchmark rate market as well, because we understand the inherent risk factors. However, just because we're familiar or these rates are familiar to us, and if we continue to rely on old practices, it will inevitably lead to financial exodus sooner or later. So the benchmark rate reforms must proceed without interruption and more expeditiously. Before the music suddenly stops, we need to turn down the volume of the music. And also, in relation to the WIC-B inclusion, and also in terms of the NBFI's growth, I believe that we also have to put our heads together to address some of the concerns. And of course, it is all up to you to ensure the confidence in benchmark rates and also in the market. And I extend my gratitude to you for your continued efforts. And I also hope that we will have very insightful discussions today, and based upon which the government should continue to communicate and also work to improve our institutions. Thank you.
감사합니다. 부위원장님.
Thank you very much. Now, ladies and gentlemen, with that, we are going to conclude the opening ceremony and move on to session 1 of this conference. Now, in this session 1, there will be 3 presentations. The presentations and the discussions. Now, after the general discussion, after the session 2, we will also receive questions with regards to the presentations as well as the discussion. And for those who have any questions, then please scan the QR code so that you will be linked to the question page. And please once again be reminded that the question will accommodate up to 300 texts. And now, ladies and gentlemen, we will begin the conference. The first presentation will be delivered by Team Leader Han Min of the Money Market Team of the Financial Markets Department of the Bank of Korea. He will discuss the progress and key tasks for expanding KOFR adoption. Please welcome me with a big hand.
안녕하십니까. 첫 번째
Good afternoon. This is Han-Min from the Money Market team at the Bank of Korea. I will discuss the progress made in promoting KOFR and key initiatives for its expansion. Looking back over the 1 year, we took the first step toward transition at this very place, sharing the necessity for Korea's financial market to move to KOFR. Some of you may recall the closing remarks from my last year's presentation. To refresh your memory, I closed last year's presentation saying we will continue to update the market of the progress and plans and responsibly lead the policy to promote KOFR. Now, accordingly, through this forum, I will continue that discussion. I will today update the participants of the work and the achievements centered on the working group thus far, along with future tasks. I would also like to mention that the preparation for this presentation benefited greatly from a survey conducted among the working group's market participants, as well as the valuable experience and know-how shared by major global institutions and central banks interviewed during our work. I extend my sincere gratitude to all who have provided their cooperation. My presentation today will first cover the activities to promote KOFR since last year, followed by the subsequent changes that are observed in our financial market today. Finally, based on an understanding of these efforts and the current status, I will touch upon the necessary tasks required to achieve the ultimate goal of completing the transition. Now then, let me first start with the progress update. Now, starting in March last year, when we launched the preparation for KOFR promotion, we created a public-private working group involving relevant institutions and market participants. That is a collaborative effort between the public and the private sectors. Since then, we have continued with our active discussions and also cooperation with numerous financial institutions. We established the KOFR Activation Task Force under the existing benchmark rate and short-term financial market council and assigned roles between the policy and market functions. And now we have also come up with this three-phase plan. First, to establish the technical foundation for KOFR adoption, to expand KOFR's share, and finally, to transition the benchmark rate from CD rate to KOFR, completing the shift. And importantly, the market group, which started out with 30 members, saw more institutions participate. For example, companies like Infomax, Coscom, and Bloomberg also joined. Now, first, we prepared the institutional basis necessary for domestic financial institutions' KOFR-related transactions. And in order to, we have also come up with the KOFR rate calculation or calculator in order to enhance the transaction convenience. And what you are seeing here, so I've highlighted 2 points in bold. And as you can see here, we have also started the central clearing starting last week from the Korea Exchange. And also the ISTA interest rate derivatives definition and agreement. Now we have also designated KOFR as the fallback rate for CD rate in this ISTA agreement, which most domestic and international financial institutions use for derivative transactions. And next is our strategy to expand KOFR-based training. First, administrative guidance for 10% of IRS transactions to be conducted using KOFR OIS was prepared and implemented starting last July. The banking sector has committed to raising at least 10% of its total funding through FRN issuance this year using KOFR FRN, and the Bank of Korea also began reflecting KOFR transaction performance when selecting counterparts for open market operations. And also this year, not only in the domestic market but also in the global market, we believe that there was a greater importance in raising the awareness about the Korean benchmark shift. And that is why we have also made new efforts such as expanding Korea's policy change to global investors visiting Korea, and also visiting London, Singapore, Hong Kong, Germany, Norway, and other locations, given the need to explain about the Korea's benchmark is high, considering the upcoming inclusion in the WICB as well. And next is the KOFR-based transactions and how it has changed. And I can tell you that it is quite positive. Now, first, this is the trading status of KOFR OIS, which the working group identified as the critical market for KOFR activation, with the biggest policy focus. Now, we have also conducted a survey on the trading readiness among financial institutions within the working group. And you can see the responses in the pie chart on the left. About 2/3 of the 32 institutions answered positively. And also the banks, now overall, the banks' positive response reached 80%, indicating a solid level of preparation. However, responses regarding the smooth execution of the transactions showed relatively less positive evaluation. But then there is one caveat here. The survey was conducted before the introduction of the Korea Exchange's central clearing system last week, resulting in many responses indicating that the transactions were not smooth due to inadequate clearing. And also, the fact that the KOFR OIS transaction volume has significantly increased from last year, as shown in the graph on the right, thanks to the participation of many institutions, shows that the market could enter a full-fledged growth trajectory with the commencement of the clearing soon. And as you can see from the graph, trading volume has increased significantly, so much so that, in fact, it is 70 times that of last year. Someone told me that I should call this 7,000%. Anyway, so when you look at the left-hand side and the right-hand side, now it is between billion and trillion. So we believe that it is now moving on to trillion in the near future. And then now that was about quantity, and now let's look at the share of transactions and the degree of share by maturity. The KOFR swap share, which remained in the 1 to 2% range during the first half of this year, has grown since July and is approximately 7% of all IRS transactions as of September. And also looking at the maturity, then we can see that it is still only at the ultra short term. So when we look at the IRS, then it shows that the KOFR-based trading is still concentrated primarily in the ultra-short maturity, where CDRS transactions are absent. But then, now we believe that this is also a positive because this is where the CDRS struggles to cover. So it appears that we need to work on a diversification strategy that enables liquidity to form across a broader range of maturities. Next is about the current status of the regarding KOFR FRNs, futures, and loans. And what is also positive here is that not only the banks but also the non-bank financial institutions are participating in the issuance of KOFR FRNs. While we did not set this year's issuance target at 10%, we can see that the trading has already significantly exceeded this level. And of course, the KOFR futures and loans still have a long way to go. While KOFR futures trading volume remains limited, we expect it to gradually increase due to the effects of activation. Next is about the future challenges. So far, the path to KOFR transition following the policy-driven process is gradually showing signs of activation. Now, to sustain this momentum and ultimately achieve the transition to KOFR, then what are the tasks that would be necessary? Now, of course, we need to significantly strengthen existing strategies. And in order to do that, the following key measures are necessary to ensure that we can proceed more stably and swiftly in the final stage. We need to enhance our expansion strategy, finalize the policy roadmap for the benchmark, and also establish a basis for KOFR trading in the global market. First, are ways to strengthen the existing strategy. This can be broadly divided into strengthening existing guidance and creating a new demand while accelerating the spot trading. Regarding the plan to strengthen guidance, the left side shows the current OIS administrative guidance. We aim to achieve the first phase together over a 5-year period by increasing it by 10% annually. There's also a target for long-term issuance. Now, of course, it is still in the early stage, But then, now in order to make this possible, then we are also seeing that many of the global institutions that support RFR conversion, countries that already experience RFR conversion, and market participants, now they are emphasizing the importance of the initial target. Market participant surveys also indicate that the minimum transaction share required for KOFR transition should exceed 50%, and that majority of the institutions responded that they are willing to trade at the target level set by the guidance. Now, considering the experience of major countries and market opinion, then it is necessary to increase the existing target to enhance the share of KOFR OIS transactions. Ultimately, we see that the market transaction will not occur gradually, with the target being split evenly until it is reached. Instead, it will show up as an exponential increase, rapidly shifting after a certain threshold. To effectively accelerate this transition, then it is deemed necessary to adopt a faster pace than previously seen. Additionally, while adopting the KOFR First initiative pursued by most RFR transition countries, what we need is also a comprehensive approach. As we can see in this example, it is necessary to consider applying the KOFR priority principle to new transactions maturity on an annual basis. And we also need to assess the impact of initiating KOFR OIS central clearing on the formation of maturity-specific transactions so that we can also change the current incentive-based target for long-term maturities.
Also, efforts to strengthen the demand base for KOFR derivatives transactions should be pursued in parallel. For KOFR OIS and KOFR futures market to simultaneously build liquidity for synergies, when enforcing KOFR OIS administrative guidance, it would be worth considering including KOFR futures trading performance. And also, it would also be worth considering introducing incentives for reducing positions in existing CD IRS contracts. To ensure a smooth transition from legacy CD contracts to KOFR, the authorities could recommend basis swap transactions and have bilateral CD IRS transactions on the books netted in a practical manner, thereby reducing the overall position size. Lastly, beyond the traditional demand base of banks and investment banks, there is also a need to identify additional sources of KOFR OIS demand, such as insurance companies. As for insurers, from an ALM perspective, it would be useful to examine whether changes in long-term liabilities arising from interest rate fluctuations could be hedged by utilizing a risk-free rate KOFR. Finally, efforts to expand KOFR reference cash transactions should be strengthened. For FRNs, a considerable institutional foundation has already been established, so there may not be so many remaining tasks. However, further efforts are needed to gradually increase the issuance ratio of banks, expand issuance by MBFIs, and also to broaden the demand base and promote longer maturities, which are already showing positive signs in the market. To enhance issuance and investment incentives when calculating loan-to-deposit ratio, KOFR FRN issuance amounts could be reflected, and continuous discussion will be needed. To promote the launch of KOFR-linked loan products, it is necessary to recommend interest rate calculation methods for KOFR reference loans, further develop them to broaden the base of KOFR-linked products, and through the publication of term KOFR calculations, KOFR-based lending practices need to be supported. And through this process, by expanding the linkage of funding and investment for KOFR, we should promote the growth of KOFR cash transactions. And for launching KOFR-based loan products, I will now touch upon recommendations. This shows an example of the recommended interest rate calculation method for KOFR loan products. There are two ways that we can consider KOFR in arrears and KOFR in advance. The in arrears average KOFR determines the interest rate after the interest payment period by calculating the compound average ex post. Theoretically speaking, this approach accurately reflects the actual RFR movement during the interest period and facilitates hedging. However, for general consumers, since the interest payable is only determined on the actual payment date, it would be difficult to operate in practice at the initial stage. Alternatively, the current or the past 10 days CD rates used for loans can be considered. A backward-looking KOFR in advance could be considered. If KSD publishes KOFR averages in advance for 10 days, 1 month, or 3 months, which are then used as a benchmark week for loan products, the operation would be easier and consumers would find the structure more familiar, similar to COFIX-based loans, thus increasing acceptability. Given these considerations, for the early introduction of loan products, it would be most desirable to initially use a KOFR in advance to support KOFR activation, and later, once the term KOFR can be calculated, to operate loan products based on term KOFR. Next, the graph and the KOFR loan products will be explained to you. Thanks to these efforts, if KOFR-based loan products are developed, it may look quite complex, but compared to CD, as KOFR generally has a lower spread with a policy rate, consumer welfare will also improve. If you look at the left side, since 2019, the overall interest rate across most of the institutions lower than the CD rate, which would actually reduce the debt service burden of the consumers. So if funding through KOFR FRN is used to manage KOFR loans, banks can also strengthen the linkage between their funding and lending operations. And the policy authorities could also have the KOFR reflecting changes in the policy rate much better as well. Now I'll talk about the CD de-designation efforts would also have to be pursued. I'll talk about the roadmap as well. So we need to consider policy roadmap for the benchmark interest rate system. So regarding the possibility of transitioning to a KOFR-centered structure in the interest rate swap market, some market participants view that it could be achieved even through the guidance, but a majority expressed that de-designating CD yields from legal critical benchmarks is essential to enhance the possibility of transition. And announcing the timing of the CD yield de-designation from legal critical benchmark would be effective in promoting the use of KOFR and facilitating the transition. The question regarding de-designation, what impact would have on transactions, the majority responded that new contracts would be benchmarked to KOFR. And for ND interest rate swap transactions, a high share responded that new transactions would be based on KOFR, while relatively fewer people said that they would maintain existing contracts. There are three things related to the transition. Regarding whether de-designation of CD yields from legal critical benchmark would make the transition to KOFR possible, the market expressed different views. Those viewing the transition as unlikely stated that if CD trading remains possible, there would be little incentive to shift, or that pricing negotiations for converting existing contracts would be difficult, or that de-designation alone would not automatically trigger the application of fallback rates. And neutral opinions included those saying that the decision would depend on the level of KOFR liquidity, or they would take different stances by maturity. And those viewing the transition as likely expressed their trust in the policy direction of the authorities and said that they would align it, and they would also make necessary preparations for the transition. And we looked at the reasons as to why there were varying opinions. It really depends on the liquidity of the KOFR transactions, and also calculation and the discontinuation of the publication of the CD rates, and whether CD rates could also continue to be used as a benchmark rate in transactions, leading to varying opinions among participants. So for a successful transition to KOFR, it is essential, first, to expand KOFR trading volume sufficiently and establish a stable path for converting legacy CD transactions. Based on these market opinions, finalizing the future policy roadmap would be important, and it would consider de-designation, which naturally goes hand in hand with the timing of announcement. And regarding de-designation, as shown in the table on the right, we can refer to major countries' experiences. The preparation period generally ranged from 1.5 years to 3 years. Euro was done in 2019, and recently, Malaysia, it took them about roughly 3 years for the transition. Together with this, the pace of KOFR reference transaction liquidity expansion, the time needed for the stable transition of CD transactions, and additionally, the point at which term KOFR can be calculated for use in the loan market should also be taken into consideration. Regarding the suspension of CD yield calculation, whether E-style fallback rate application conditions will be met, and the conversion cost for existing CD reference contracts should be considered in a balanced manner. These matters will be further discussed through the KOFR Activation Working Group, which will continue to collate market feedback. Lastly, as one of the main pillars of future initiatives, we have to look at the CD-based trading in the actively traded offshore ND market for conversion to KOFR. We first need to introduce central clearing services for ND KOFR OIS transactions. In 2024, the clearing balance of Korean paper CD IRS is around 2,000 trillion won onshore and roughly 5,200 trillion won at LCH for ND transactions, forming an even larger interest rate swap market offshore. And these transactions are mostly cleared through LCH. And they support major countries' benchmark rate transitions. and they have cooperated with the relevant authorities in each jurisdiction to provide essential clearing services for OIS transactions, and in some cases participated as a member of local working groups. The graph on the right shows the share of outstanding interest rate swap products cleared through LCH. IRS and 28 currencies are cleared through LCH, and among which 20 jurisdictions have introduced OIS clearing following their RFR transition. Recognizing this situation, our working group has requested LCH to provide clearing services for KOFR to support the benchmark rate conversion, and LCH expressed its active willingness to support our transition process. However, given the size of Korea's clearing volume, LCH noted that it would be difficult to provide CD and KOFR services simultaneously, adding that it would actively support the transition process with the goal of achieving a full migration to KOFR. Now, furthermore, let's draw on, and they actually drew on experiences in cooperating with major countries during their RFR transitions. They suggested some of the considerations. It is very important that there is a partnership between the public and private sector, and their interests must be aligned. For successful benchmark rate transition, LCH also shared lessons from major countries' experiences, noting that the suspension of existing benchmark calculation, the RFR first initiative, and restrictions on new transactions using the old benchmark before discontinuation would need to go in parallel. Now, major economies have introduced clearing services, but cases like Hong Kong, where trading volume remains limited, offers useful implications as well. Now, Mexico pursued a full conversion through the central clearinghouse alone, and they experienced significant market confusion. This suggests that having clearing infrastructure alone does not guarantee a smooth transition. Lastly, to further strengthen the foundation for KOFR trading in the global financial market, it's necessary to enhance cooperation with relevant global institutions. Last year, there were discussions with ISDA, and efforts were made for week B inclusion. Given this growing links with global financial market, we must continue to prepare for tasks such as the introduction of ND KOFR OIS clearing, promotion of KOFR transactions among global FIs, and information sharing and cooperation on benchmark rate transactions. In offshore markets, we must work to enhance global investors' awareness of KOFR transition, and at the same time, seek continued cooperation with major supervisory bodies and central banks to continue to share experiences and know-how from their benchmark rate transitions. We also need to make effort to stabilize the RP market as well. I know that I'm only given about 1 minute to 1 minute and 30 seconds. Now, last year, when we raised the banner of KOFR activation, I said better late than never. But now, based on the policy momentum and preparations made thus far, it is time to strengthen existing policies, accelerate the transition, and align more closely with global standards, moving toward KOFR fast. And in that sense, I brought this image on the right. It might look familiar to you. This is a picture of a saddle path. Although there are so many great macroeconomists over here, if I may, I would like to interpret it this way. Now, over time, variables may converge to equilibrium or diverge away. And even if there's an equilibrium point we aim for, not every path leads us there. With this in mind, policymakers and market participants together have already thrown the dice for KOFR activation. Now it is time to think carefully about where to throw that dice next and to push forward with policy based on that consideration. And if we throw it wrong, it may quickly fall off in another direction. Going forward, through continued communication and cooperation with domestic and international market participants, we must responsibly complete the transition to KOFR. Thank you for listening, and I'd like to express my deep gratitude to all the organizations that have worked together for the activation of KOFR. Thank you.
그리고 시간 관계상
In the interest of time, this was not included in the presentation slides. As part of the global efforts, LCH and ISTA heads and the representatives have given us some promotional videos, and I think we'll be able to play those videos for your understanding, maybe during the break time. Thank you.
네, 감사합니다, 팀장님.
Thank you very much for the presentation. And now let me invite the next speaker, who is Research Fellow Kim Nam-jong from the Capital Market Department of the Korea Institute of Finance. He will talk about the assessing the stability of the domestic repo market and directions for institutional improvement. And now here is Research Fellow Kim Nam-jung. Please welcome with a big hand.
네, 안녕.
Thank you very much. Good afternoon, ladies and gentlemen. I am Kim Nam-jung, Research Fellow at KIF. Now, today I would like to talk about how we can assess the stability of the domestic repo market and improve the institutions. And in particular, I would like to focus on the research results of the repo market in the FX stabilization bond. Now, the repo itself. Now, this analysis actually requires quite a lot of data, so I would like to first ask the Korean depository for providing access to such data. Now, first, I would like to go into the size and so I would like to first talk about the current status and evaluation of the domestic repo market, followed by the volatility elements of the repo market, and to conclude with the institutional improvements necessary. Now, first, let us look at the scale of the repo market. Now, the Korean repo market continues to grow at a very rapid pace. As you can see in the bottom left-hand side, then in 2010, the intraday trading was about 10 trillion won, but then since then, it has gone up to over 92 trillion as of 2019, and then now this year it has already topped 200 trillion won. So even compared to other repo markets, Korean growth is quite pronounced. And this also has to do with the overall money increasing as well as the MMF balance continues to grow. So as a result, and also given the fact that the WIG-B inclusion is set for Korea, the repo market is set to grow further. And also we can see that globally the securities lending is also increasing. And also in the case of Korea, it is also increasing. We have also conducted the institutional reform of barring the participation of non-banks in the call market, and as a result, many of the demand has moved from the call market to the repo market. In other words, repo market has now become the center of the funding that involves almost all the market participants. And the repo market is also highly networked with other segments as well, and it is also a systemically important market. In particular, any failure in the refinancing in the repo market leading to a systemic risk or the repo run, now it also has been studied extensively by many scholars. And last is, it also serves as an important basis market for KOFR, which is the leading risk-free rate. Now, the need to transition to the RFR or KOFR is absolutely necessary, and as it serves as a basis, it is also highly important that we need to maintain the integrity and the quality of the repo market as well. So as we can see, because of its volume and the representation in the financial market, the Korean repo market also has a lot of benefits to serve as the basis for RFR calculation. Given that it involves all the financial institutions, it has the best representation. And given that all the financial market is also the user of this market, then it also means that it is not concentrated in any one segment or sector. And given the fact that the transition to RFR was triggered by the LIBOR manipulation, then having strong fundamentals is the biggest priority for the RFR assessment. And that is why Repo was selected as the best base market for the RFR. Now, despite these advantages, when we also think about the comparison to call rate, then there is still the higher volatility as well as the higher rate. Now, the image on the graph on the bottom left-hand side, now this is the total call rate versus the repo annualized rate. And this is also showing the daily variation against the BOK's spreadsheet. And as you can see, the average for the banks and the non-bank financial institutions is low, whereas the rate is higher for the sovereign bonds. And then on the right-hand side, now this is the daily standard deviation for year of the spread compared to the BOK base rate. But of course, the volatility of the repo market in and of itself is not negative, in particular as it can serve as the baseline for the RFR. When there are changes in the market's funding conditions, then the benchmark rate also has to reflect these changes. Now, if we can improve the price discovery function of the benchmark rate, then perhaps this type of variability is absolutely necessary to maintain the creditworthiness or the credibility of the benchmark rate. But if there are any volatility or noisy volatility that has little to do with the market fundamentals, then it would also be necessary to ease such volatility in order to ensure the integrity of the baseline for the RFR calculation. I will come back to this later on, but then now, the domestic repo market, for the fluctuations at certain times, and also due to various other factors, sometimes they are prone to spikes. Such periodic spikes can also serve as a magnifier if a shock occurs in the repo market. In particular, by easing the frictional price volatility in the market, we can also make sure that the benchmark linked contract can also better reflect the market's fundamentals. Now this is the time series graph of the sovereign-backed repo versus the overall call rate. And you can see that the repo has bigger spikes compared to other instruments. Compared to that, call rate has a smaller range of volatility, and also for the bank and the securities borrowed call rates, they tend to show spikes downward. And this is because banks are the most conservative fund provider in the market. So they play the role of filling the marginal area in the market. So when the market conditions are at their worst and when there is funding shortage, then the banks tend to step in with more funding provision. That means that when there is a bigger movement of capital from banks to non-banks, then the upward spike tends to grow. And in the case of Korea, the banks tend to take a smaller share of the sell side, and that is why we tend to see more of such spikes. And this shows that even with the same transactions, depending on who the counterparties are, the spike could also differ as well as the rates. And now let me turn to some of the elements of variability in the domestic repo market. Now, in the domestic repo market, what are some of the sources of variability? Now, one thing could be the heterogeneity of the rates by sector. So this is on the KOFR linked trading, and the distribution of rates by the financial sector. So on the left-hand side, again, the more conservative entities, banks, and also the bank trust. So you can see that their buy rates are higher. And then now on the right-hand side, now these are the sell sides. So for example, the securities companies and the asset managers, so their rates tend to be higher. So again, depending on the risk level of the counterparty as well as the entities, then the rates also are different. Now, given such heterogeneity of the rates among the sectors, then when there are differences or sharp changes in the share of the financial sector that are participating in the repo market, then this could also give way to higher spikes in the repo rates in the market. And this is something that I have already touched upon, so let me skip this slide. Now, such heterogeneity of the rates would also have somewhat of an impact on the KOFR rate. Now, the KOFR rate was formula calculated from 2022. And since the formula is also publicly available, we can also calculate the KOFR rates based on different assumptions. So this is the KOFR rate variability and also the correlation with the changes in the share of the different institutions in the repo market. Again, we can see that there's a high correlation with the entities that are involved with the trading. And we can see that when there are bigger involvement by the banks, then the KOFR rate would also go up. And now another source of volatility in the repo market is the calendar events. In other words, what's called the month-end, quarter-end, and year-end effects. Now, at this time, because this is the time for corporate tax income and other activities, the MMF and the trust balance would go down, reducing the overall fund supply. So as you can see in the graph, there are big differences in the repo rate depending on this calendar period, and especially at the end of the quarter, then we can see that the amount dealt is much higher, and that is why the repo rate also differs quite dramatically. So you can see that each time, in most cases, the rate would go up. So at the end of the quarter, so because of the lower MMF and the trust balance, then between the asset managers and the banks, the asset managers and the securities, now their involvement get bigger, and then the bank's share falls. And as a result, we can see that overall the rate goes up, and again there are dramatic changes in the share of the transactions involving institutions from different sectors. And now, because of such demand-supply friction, the volatility goes up, and that is not only due to the month-end, quarter-end, and also the year-end, but also there is the reserve closing date effect. So as you can see below, now this is the graph that shows the changes in the repo transaction volume before and after the reserve closing date. So you can see that on the closing date and the day before, we can see that the repo transaction also significantly falls. And this is because at this time, the banks, now in order to manage their reserve, they will dramatically reduce their buy in the repo market. And as a result, the fund supply reduces. And then because the other entities also know about this, they would also reduce their activities as well. But then now for the closing date, then unlike the other calendar events, we can see that the rates go down, and that is because on one hand, of course, there is a shortage of funding, but also because now there are fewer transactions. And also the intraday volatility tends to grow because of the lower liquidity. And this also is because at this time, then the shark absorption capability around this time is also quite affected. So this also means that if such a shock were to occur around this time, in other words, the reserve closing date period, then it is highly likely that the shock could magnify. Now, among some of the precedents, then we can see that because of the timing coinciding with such calendar date, there were cases where the shock magnified. One is the case of the 2018 Qatar ABCP. Now, at that time, the Turkish financial crisis was just beginning, and then at the time, the credit risk of the Qatar National Bank's ABCP were rising. And at this time, the Qatar National Bank ABCP, now some of the domestic MMFs had already had the Qatar ABCP included. And then the redemption was suspended, and during September, there was 17.7 trillion won of net outflow from the MMF. And that is because we believe that the calendar event also coincided with that. So we can see that this was a case where the capital troubles in one certain sector had led to the overall uncertainty and instability in the repo market in general. And next are the implications as well as ways for institutional improvement. Now, we believe that it is necessary to improve on the demand-supply friction. And on one hand, such demand-supply friction is owed to the structural and environmental characteristics of the Korean repo market. For example, in major countries outside, then the prime bank now they would get the funding from and they would get the funding and then lend them to the banks. But then now in the case of Korea, we have many sectors that have similar counterparty risks participating in the market and also are matched against each other, meaning that it is highly likely that the risks could occur among them. And also at the same time, in major countries, they have the ample reserve system or the abundant reserve system because of their scarce reserve system, meaning that in times of shock, then they could also have a higher absorption capability. But in the case of Korea, we have a tight reserve system, meaning that it could be more susceptible to shocks. But of course, the resulting impact could be different depending on the path dependency or the other factors specific to a nation. Then perhaps the regularization of the two-way repo transaction could be one way of easing such temporary supply-demand friction in the market. And second is the need to consider the CCP. Now, CCP had been discussed for a long time in the Korean repo market as a way of stabilizing it. Now, the advantages are that it would reduce the settlement liquidity thanks to the multi-party offsetting effect and also reduce the counterparty risk and also the collateralization benefit. But because of such issues like the cost and the concentration risk, it has not been fully launched yet. But then again, considering the various advantages that it offers, I do believe that it is necessary to once again consider the need to introduce the CCP in the repo market. Now, if the CCP is to be included, then the preliminary numbers show that the liquidity for settlement in a day could reduce by 10 to 20%, and also such reduction in the counterparty risks could also ease part of the rate differential among the different sectors. And also, whenever a crisis occurs, then the CCP could also serve as a buffer to maintain stability. And the next improvement area is improving data accessibility and segmentation. Now, of course, the difficulty in accessing data for the repo transaction, of course, it is not only in Korea, it is common in other countries too. And that is why in the US, during the March COVID period of 2020, now when the US went through some confusion in the money market as well as the sovereign bond market because many of the hedge funds now, because of the repo borrowing, they try to conduct transactions in the spot as well as the futures basis in the sovereign bond market. Now, of course, as a result of this, they have been making improvement in order to enhance the data transparency and also to broaden the repo central clearing. But still, it is very difficult in the case of Korea as well to differentiate among the repo investors, for example, whether they're MMFs or hedge funds or others. And also it is difficult to understand the leverage among the entities. So it is important to also segment the data to a finer granularity and also allow better access. Thank you very much for your attention. All right, thank you very much.
금융시장
Okay, last but not least, we're going to invite BOK, Mr. Woo Han-sok, who is working as a manager for the market research team at the Financial Markets Department. He will talk about the role of the open market operation for the stable development of short-term money market. Please welcome the speaker with a round of applause. Good afternoon. I'm from BOK, Financial Markets Department, Woo Han-sok. It was 1 year ago, we had a policy conference for the activation of KOFR. I was a moderator, and I'm standing before you as a speaker, so it's personally a big honor for me. So previous speakers talked about repo market and short-term money market. They dealt with the current status and how we can work to promote the adoption of KOFR. And I will talk about the open market operations, what they have done, and what is the role that is expected of the open market operations. Especially the central banks of major economies, they continue to review the current status and the current market system. And I will also talk about the current progress made in the open market operation that is currently conducted by BOK, because it is also drawing a lot of attention from market participants. Can we move to the next slide, please? Table of the contents go as follows. What is a role that has been played by the money market for the long-term development of the financial market? Where should we focus on our efforts for developing the money market and also the open market operations? Basically, the BOK is performing open market operations focused on three general principles of effectiveness, efficiency, and reciprocity. In April, we had an issue note, and we shared our stance on this, especially in terms of money market development. Money market should be used as a basis for the open market operations, and also the foundation should be strengthened. That is why we focus very much on efficiency and reciprocity, which are very critical, the drivers for the development of the financial market, the short-term financial market. Let's go over the history of the open market operation. Up until 1997, BOK focused on the money supply, which used the reserves for the payment as a key basis. However, the direct market really developed, and financial innovation accelerated. Some of the monetary indicators became very unstable, and we saw that the correlations with the inflation were vulnerable. So we focused on introducing monetary targeting, from monetary targeting to inflation targeting. So inflation targeting, it is about adopting an interest rate-based policies, looking at the money market as well as overnight call rates as the operational target, and also to maintain that as our policy goals. Now, the call rate targets were first determined by the Monetary Committee. Now, our system is quite different nowadays because we're currently working to determine the interest rates. But anyway, back then, it was very important for us to focus on the short-term money market and also to ensure communication with the market participants. And this was used as a tool for open market operation. And in March 1998, we had a realignment of the market system. We introduced our base rate for the BOK, and we also regularized the RP sales. We introduced standing facilities and introduced interest rate corridors system. But after we introduced BOK base rate, call rates continue to operate as the market rates, and it became an implicit target for the operation. Ever since then, we had a market-friendly operation, and we diversified our tools for market operations and also to improve predictability and convenience in transactions. For example, MSB and the 3-year term MSB were introduced along with other instruments. We also made our guidelines more specific. We also had an early advancement of our policies so that we can have an effective communication with the market participants. And after 2000, due to internal and external factors, there were some financial stresses that we underwent. So in terms of addressing the market jitters, we have taken various measures to stabilize the market, and sometimes there were incidents where it called for our intervention, RP purchase, or expanding the eligible counterparties and also purchasing KTBs and MSBs. We would look at the market jitters and also the depth of such stress, and we would use a mix of these tools to conduct our open market operations. During the COVID period, we were fully supplying a liquidity into the market, and last year we also temporarily increased the scope of our eligible counterparties, including the banks as well as futures companies and securities firms. And once the market recovers, BOK would wind down those measures so that we can go back to our normal times of operations. This is to make sure that there's not an over-reliance on the BOK. We'll now take a look at how the market situation has evolved. And this was already mentioned by the previous speakers. The biggest thing is that there has been a growing influence of the NBFIs. Out of the total assets, NBFIs account for about 60%. And in terms of the short-term money market, in terms of the share of transaction, NBFIs is accounting for more, and they're also having more impact on the market. The graph shows RP sales, mostly that are done by the securities and asset managers. And as for the RP purchase, the bank's portion has actually been declining. It is under 50%. The NBFIs are growing very significantly, and they're also bringing positive as well as negative impact as well, because it could lead to risk management issues. Now, the right graph shows the deposit size by the NBFIs, especially if there's a big bank run. If there's a big share taken up by the NBFIs, it could actually translate into stress or risk issues. The second change is that we're seeing growing volatility in the RP rates and increased impact on call rates. The RP market is actually becoming bigger. Securities and other financial institutions are big players in the RP market. Because of the market characteristics, the rates are higher than the call rates. And we also had a commission research last year, which shows that since 2015, RP rates have more impact on the call rates than vice versa. By managing call rates, we have the monetary pathway that is actually affecting the money market rates and others. And among the borrowings by the securities, their share in short-term borrowing has been growing, and MMF deposits are also increasing, which is showing that there's a shorter-term trend in funding as well as in operation. As you may be well aware, the stable coins, once they're introduced, through the reserve pathway, it could also lead to higher volatility in the money market. That is some of the concerns that we have internally. Now, against this backdrop, the institutional framework has gone through some changes in terms of open market operation. Two things that I want to focus on. First is that we have expanded eligible institutions counterparty subject to open market operations, which took place in July last year, and this year as well. We're also increasing the scope of counterparties. And to improve the effectiveness of the monetary policy and also to facilitate transactions in the money market and also to manage risks related to our counterparties. So we assess and select our eligible counterparties for the open market operation if there's any stress risks. And we will also utilize this in order to stabilize the market by expanding the scope of eligible counterparties, because it works as a signal that the central bank is now intervening or stepping into the market to improve the stability of the market. Once we have a strong foundation for the liquidity, we could also address temporary bottlenecks in the market. Amid such changes, as there is a wider impact on the monetary pathways, the asset management firms and deposit-taking institutions have also been included among the NBFIs counter the eligible counterparties, and also strengthen control on overnight rates in response to MMF growth, and also for the non-bank deposit-taking institutions. We're also working to strengthen the liquidity supply pathway for contingencies such as bank runs. That is why we increase the scope of the eligible counterparties. Of course, during the process, we have identified the need to better manage counterparty risks. Considering this, we are taking various measures. The BOK does not have any authority to conduct an oversight or does not require NBFIs to submit certain documentation. And of course, this may lead to some issues. That is why we have put in place the following risk management measures to stabilize our open market operations. These are the measures that we're taking. First of all, we're focusing on large institutions with market influence, try to understand where they stand, and also to increase our actions on them. And also, we're establishing criteria which includes financial soundness indicators of the NBFIs, and they are incorporated into the scorecard when we select our counterparties. Also, when we conduct RP purchases, margin rates would be differently applied for NBFIs so that the counterparty risks could be managed at a certain level. In terms of the impact stemming from the expansion of the eligible counterparties, we judged that the effectiveness of supply has increased and also the liquidity has improved. So we have a wider scope of eligible counterparties for the open market operations. These are the shares that they take up in the overall sector. For the asset managers as well as securities firms, about 50% are covered. So if there are any risk factors in the money market, we would be taking these measures to stabilize the market. And as for the call rates, after the expansion of eligible counterparties, we're widening our pathways to supply or to absorb liquidity, reducing volatility in the market as a result. once we start trading with these counterparties, they would be taking part in bidding process continuously, and they would become more familiar with our process. And if needed, when there's a need for increasing liquidity, we would be able to achieve our set targets because these NBFIs would be ready to take part. Second, I would like to talk about the enforcement of the two-way RP transactions. With imbalances growing in liquidity supply and demand, we decided to introduce this policy to enforce two-way RP transactions because we have more participants in the money market and their behaviors are becoming more complex. Of course, we try to make good predictions as to what will happen. However, sometimes we could have temporary problems in terms of liquidity supply. So we just sold RPs once a month to absorb liquidity from the market, but now we purchase RP once a month. So conducting both purchase as well as sales to have active transactions in trading with the market and to ensure liquidity. And also, there is still that stigma associated with the use of BOK's liquidity supply system. We are trying to alleviate such concerns. And also, for example, we would assess the collaterals from the NBFIs, which would also lead to them gaining relevant experiences. After the system was introduced, of course, not much time has passed, so it would be difficult to put any quantitative assessment on that. But the spread in terms of standard deviation has lessened. And when we communicate with the market participants, they also say that since we have RP sales, RP trading every week, knowing that uncertainties has declined in terms of liquidity. And because they can predict what will happen with the RP trading, they can better design their policies for fundraising. So they're giving us some positive feedback. And because we have regular RP trading, it gives a lot of predictability and visibility into what we'll be doing. And of course, the size and the scale may vary, but financial institutions understand when such RP trading will be taking place. Also leads to wider participation of the participants in the bidding process. So we're widening the sources of liquidity. Now, through such institutional improvements, as we conduct our all open market operations, we are also receiving a lot of attention from market participants around the world. It is because of the fact that we're more proactive than major economies around the world, because we're having two-way RP transactions, which is quite rare, because most of the major economies, they would just be supplying liquidity as a key currency, because they do have a lot of demand coming from onshore. But for major emerging economies where they need to accumulate their foreign currency reserves, they would have to absorb liquidity from the market. So this is a two-way operation that we're doing in Korea, and those countries might not necessarily feel the need to do both ways. But when we go to international conferences and have discussions with the participants there, especially with the NBFIs taking part in the market, leading to more volatility. This is also causing a cause of concern to central banks. And they also feel the need to strengthen their toolkits by introducing different measures. In terms of eligible counterparties, now we're including these NBFIs. This indicates that we're taking a more proactive stance to other economies. Especially looking at the liquidity providers, it's usually banks or PDs, primary dealers. But for us, securities as well as asset management firms are able to enjoy this liquidity in the market with wider pathways for absorption as well as provision of liquidity. And also ECB has conducted a review of the open market operations for improvement. our two-way RP trading, and also expanding eligible counterparties to include NBFIs, and also issuing MSB to absorb liquidity. These institutional improvements are drawing a lot of attention. And we're also taking the initiative and taking a leadership role in engaging in discussions. Lastly, I will talk about what we should do from open market operation point of view. We had a symposium in April, and we shared this information back then. So first, starting with the efficiency for the supply. We do once a month RP trading. We need to continue to review whether we're achieving our intended effects. For example, easing the volatility in the money market, whether that is being achieved. And we need to continue to listen to market feedback because we focus on the principle of reciprocity. Through the open market operation, these market participants should be able to enjoy the benefits of our operations. And our communication will continue, and we look forward to your opinions. Through the RP purchase, once we execute our transactions more frequently, naturally it will lead to increased footprint by the central bank in the money market. However, we really want to avoid having FIs depending too much on central banks, and it could also lead to a moral hazard. So there will be various tools to offset these potential side effects. So for example, in terms of the supply size, this is just limited to a level that would work as a pump priming for the market. This is the lowest bidding price that would be used as a base rate, so that the central bank's supply of liquidity do not become an easy money for the participants. Through the regularization of RP sales, we will continue to see whether we're achieving the intended targets and see whether there's any additional need to supply liquidity and to expand our eligible counterparties. Looking at the right side, these are central banks of major economies having different goals and having different liquidity supply channels. And when you go to international organizations, international conferences, they could be using maybe one lever, or could have a mix of different instruments. We cannot say one is better than the other. We'll have to see how the market is operating, whether it is fit for purpose for the Korean market. Second is to improve the utilization of market stabilization bonds, which is a key tool for absorbing liquidity. This MBS are one of the tools for the open market operations for absorbing long-term liquidity from the market. And they also play different roles in the financial market. And we have seen that there has been a lot of reduction in outstanding balance. However, if it leads to excessive reduction in outstanding balance, it could have a negative impact in terms of its function as its safe haven assets and policy tools and levers. So over the mid to long term, we plan to increase our outstanding balance at the MBS in a gradual manner. These are the counterparties for the MBS, and we have conducted a survey with the counterparties regarding the importance of the functions played by the MBS. They have recognized the importance of the bonds, and they also gave us opinion that it would be better to increase the frequency of the issuance of the market stabilization bonds. Next, we will work to continuously examine the role of KOFR from monetary policy perspective and open market operation. Now, KOFR is moving in line with the base rate in a stable manner and has positioned itself as a key money market rate, and its importance will only grow in the future. So when we select trading institutions for open market operation, track records regarding KOFR are reflected in evaluation, including loans. And once KOFR use becomes more widespread, the base rate of BOK will spread out across the market through KOFR. We'll see the speed of expansion and to look at the effectiveness and also its role as a reference rate in the market. That concludes my presentation. Thank you very much.
네, 감사합니다, 과장님.
All right, thank you very much for the presentation. And now with that, ladies and gentlemen, we will conclude session 1 to be followed by a short break. Please enjoy the snacks prepared outside and please come back to the conference hall by 3:50 so that we can start session 2. And also, LCHC, ISDA video will be played over the break. So please also pay attention to the screen. Thank you.
Thank you for inviting us to take part in today's important conference on the development and activation of the KOFR benchmark in Korean markets over the coming years. My name is Philip Whitehurst, and I'm here to represent LCH, the market-leading central counterparty. We operate clearing services across a number of financial markets, including the swap clear service for global OTC rates derivatives. I've had the pleasure of leading our efforts to support benchmark transition across these markets in places such as the US and also in important regional markets such as Singapore and Thailand. LCH and LSEG more broadly are delighted to offer our support to the Korean authorities and to Korea's market participants as you pursue the transition to KOFR. Our involvement is of course likely to centre on OTC derivatives and specifically on work to promote the adoption of KOFR in interest rate swap markets. For context, we currently clear a non-deliverable swap linked to the Korean KWON 91-day CD rate. And this is our jointly most actively traded non-deliverable product, with year-to-date 2025 registration volumes of over $5 trillion. And the product is very actively traded by a range of international investors. Derivatives market transition has been a cornerstone of transitions elsewhere, and so we expect it to be critical for Korea too. We've gained great knowledge and experience from these transitions, and we hope our insights can serve to guide and support the Korean market as we work together to deliver a successful transition of liquidity to the KOFR-based marketplace of the future. We stand ready to support the industry's efforts and look forward to following the progress you make today and to hearing more about the role we can play towards a successful outcome. I hope you enjoy the rest of today's conference.
Good afternoon, and my sincere thanks to the Bank of Korea for inviting me to speak today. Benchmark reform is one of the most important global financial market initiatives of the past decade. Around the world, authorities and market participants with ISDA support have transitioned from legacy reference rates like LIBOR to robust transaction-based risk-free rates. ISDA has played a central role in this effort, publishing fallback protocols and documentation, coordinating with regulators, and helping ensure consistent implementation across jurisdictions. These efforts have strengthened market integrity and supported confidence in the derivatives and cash markets. Korea's progress in this area is encouraging. The plan announced by the Bank of Korea and the Financial Services Commission to promote benchmark rate reform in 2025, centered on the Korean Overnight Financial Repo Rate, or KOFR, marks an important milestone. Expanding the use of KOFR in derivatives and other financial instruments will help align Korea's market with global standards and enhance transparency and resilience. ISDA stands ready to support Korea's reform efforts. ISDA's work, including the fallbacks protocol and standard documentation, provides the legal and contractual foundation for a smooth transition from the Korean KWON CD rate to KOFR, reducing uncertainty and complexity for market participants. The journey of benchmark reform is challenging, but the benefits are clear: more reliable benchmarks, better risk management, and stronger foundations for the real economy. Once again, I'd like to thank the Bank of Korea for its leadership and for inviting ISDA to be part of this important dialogue. We look forward to continuing collaboration as Korea advances its benchmark reform agenda. Thank you very much, and good luck.
오늘 컨퍼런스는 한영 동시
We have a simultaneous interpretation from Korean to English being provided for the conference, and this is also being live streamed on YouTube. We're going to begin session 2, panel discussion and Q&A. This session will be moderated by Professor Hang-Yong from the Department of Economics at Yonsei University. Please welcome the moderator and our panelists. Big round of applause is in order.
예, 안녕하세요.
Good afternoon, ladies and gentlemen. I am the moderator of this panel discussion. My name is Dae-Yong from Yonsei University, Department of Economics. Now, in session 1, we have heard from 3 speakers on thought-provoking discussions, and I'm sure that because we all come from different walks of life, your points of interest might differ. But then now for myself, the first presentation by Mr. Han-min, so I would say that he explained in great detail the direction of the KOFR adoption, and he also showed us some survey data to show us the readiness as well as the acceptance level in the market, and he also talked about how long it took in other markets to adopt their RFR, and he shed light on where we are today and where we need to be headed. Thank you for that. And then now, also the second presenter, so research fellow Kim Nam-jong, so the RP data that is really rarely accessible to others, so he was also able to tap into that data and also to do some time series comparison. And now also what is important is that now he also mentioned that we needed to look at the stability of the overall domestic repo market as well as the overall institutional improvement. And then now the third presenter, economist Woo Han-so, so he talked about the bidirectional RP and also how we needed to expand the overall market. And also looking at the Federal Reserve that has gone to the abundant reserve system, then we can see that the federal system actually decreases. But then now the advantages of the preemptive movement and also the excessive reliance on the central bank, then perhaps they could downsize the market function and so forth. So he has also touched upon some of the disadvantages potentially. So thank you very much to the 3 presenters. And since we are coming from different walks of life, I do believe that there would be different points of interest for each of us. So today we have 6 panelists amongst us, and I believe that each will touch upon the matters of interest to them. Now, the time given to us is 1 hour with 6 panelists. The order will be the order that is found on the program. So I would give 7 to 8 minutes to each panelist, and then I would like to utilize the remaining time to have a Q&A session, including the questions to be received from the floor. So now then the first panelist is Mr. Kong Dae-hee. Thank you very much. I am Kong Dae-hee, the head of Open Market Operations Division of the Bank of Korea. I am serving as the secretary to the working group. So today I would just like to discuss the policy tasks, policy challenges for the KOFR adoption as well as the money market development, and what are the tasks needed. Now, first is the need to increase the administrative guidance target for the KOFR OIS in order to, so especially related to the interest rate market. Now, the KOFR guidance came up with a initial target of 10% to move up to 50% by 2030. And this is understandable because in the beginning there was almost no KOFR OIS-based transactions. So high target from the beginning would be a burden on the financial institutions. So they started out low and to increase the target by 10 percentage points each year, and then also to flexibly adjust it depending on the market circumstances. But then now, in the past 1 year, so looking at the transaction system, then now because some of the financial institutions, because the bid-ask prices are not sufficiently closely spaced, they found it even more difficult to find the counterparties. And also in the transition from the CD to KOFR, so if we are to stay in the middle ground for too long, then there could be also fatigue in the market and also loss of credibility in the transition. So it might be necessary to increase the target rate. So it might be necessary to increase the annual increase from the current 10 percentage points to 20 percentage points, but of course the details have to be discussed at the working level. And then now, next is about the KOFR loan product, which is currently the slowest among the KOFR-linked markets. Now, there are largely two reasons why we need this. First is about the KOFR adoption. Now, if we can link the KOFR FRN-funded capital to the KOFR loans, then the financial institutions can strengthen their link between funding and management. And also, depending on the KOFR-based loan position, there could also be higher demand to hedge KOFR position using OIS features or derivatives. So this would also enhance the synergy and accelerate the KOFR adoption. Another reason is for the consumer welfare. So oftentimes you would be thinking that the policy rate has gone down. How come my loan interest is not? And of course, those in the financial sector would know that there is no one-to-one relations, and also other factors are at play as well. But then still, the general public might still be disgruntled about this lack of linkage. So if we can also utilize KOFR as the lending rate, because it is more closely linked to the policy rate, then this will also increase the choices for the consumers. And also, even today, now the consumers have the options of selecting between the 6-month COFIX or 1-year bank debenture-linked loans when the rates are set to rise, and they can also choose the 3-month CD yield loans when the rates are set to fall. So if we can also introduce KOFR-based 1-month floating rate loans, then this would greatly enhance their choice. And also, as was emphasized in last year's conference, now of course that it differs, but the CD rate often hovers over KOFR level, and it is also it has downside rigidity. But also, when there are the market instability, then their downside risk can be magnified. So it would be better to have the KOFR-based loans because they tend to be more stable. And then third is about the hedging and calculation of key CD yield indicators as well as the disclosure. Now, we are well aware that the decision to unlink the key CD rate from the major benchmark is not an easy one, as it significantly impacts numerous transactions that have used CD yields as a reference. But looking at the global precedents, it is undeniable that the most crucial factor in advancing the benchmark rate transition is providing a clear direction for the future. And that is why I believe that it is necessary for us to have a discussion about more concrete and clear policy timeline. And I understand that the discussions on the benchmark rate transition have been actively taking place this year at major international organizations such as the BIS and EMEAP. Recently, Malaysia, which was at a transition stage similar to ours, announced on October 16th that it would cease calculating the existing benchmark rate, the Kuala Lumpur interbank offer rate, by 2028 and transition to the Malaysia overnight rate. Now, while the transition process will undoubtedly be challenging and costly, I do believe that our financial market process possesses sufficient resilience to navigate this smoothly. So it is important to note that delaying this decision could lead to an accumulation of new contracts referencing CD rate. Next, I would address the introduction of the CCP in the repo market. Now, as was already mentioned during the presentation, Korea's repo market has grown. with the daily trading volume of 180 trillion won and including both won and foreign currency amounting to approximately 260 trillion won in outstanding balance. Considering the interconnectedness of the repo market with other financial markets such as bonds and funds and the future linkages with various derivative and spot product transactions, once KOFR becomes active, the stability of the repo market is of utmost importance. Therefore, introducing a CCP for the repo market is expected to play a positive role, not only in terms of transaction stability, preventing counterparty defaults from spreading as systemic risk, but also in terms of price stability, such as mitigating repo rate volatility. In response to potential instability in the government bond market through repo transactions, the U.S. is preparing regulations such as mandatory repo clearing. The UK and EU are also discussing related matters. Of course, direct comparison between Korea's repo market and those in the US or Europe are difficult due to structural differences. However, given the significant growth of our repo market, I do believe that it is time for us to actively consider this option. Last but not least is about the OMO for the promotion of the money market. And now the Federal Reserve in last Wednesday have also announced the discontinuation of the quantitative tightening. And such decision by the Federal Reserve is due to the fact that the reduction in the reserve could affect the money market stability. And this is because there was the floor system. In other words, the changes in the reserve size, now this could negatively affect the money market because of the floor system that has in place at the reserve. So then from such a case, then because in this floor system, then the policy rate level interest is paid on the reserve. So then the reserve also serves as an investment asset. And also it is prone to volatility in the other assets yield depending on the demand for reserve. And of course, right now, there is an ample reserve. And it appears as if the money market rate remains stable at the level of the reserve. But still, because of the volatility in the money market, there is still the concern or the risk of the policy losing its flexibility because of the concern over the money market instability. Now, in the case of Korea, now we have continued with the ceiling system, and in such a case, then the reserve demand is set at the low essential reserve level, and it also has the advantage of lessening any problems that could arise from the fluctuation in the reserve level. But then, now, of course, there are some factors that could increase uncertainty even under the ceiling system. For example, appearance of new payment systems and also the digitalization of the finance. But I do believe that the Bank of Korea will continue to maintain stability by promoting such systems as the two-way RP transactions. All right, thank you very much. So that was Mr. Kong Dae-hee, and now I would go to the next panelist to tell us the market perspective.
맞습니다.
Hello, I am from Hana Bank. I'm the general manager for the Financial Market Investment and Trading Department. I'd like to thank the BOK working group level officials and financial stakeholders for your efforts. For the last 1 year, KOFR has now taken root in the market, just being something new to the market. And I would like to talk about two things from a market participant point of view. First, regarding the activation of KOFR adoption. And I think we've taken off on a good footing, especially from the second half of last year with the FX market liberalization and weekly inclusion. Against the backdrop, the the risk-free rate, I believe it is also going in the right direction. Especially if you look at the derivatives market, KOFR OIS transaction volume out of the IRS is accounting for about 7% with an increase. It is also moving near the target of 10%. With the CCP clearing service being introduced to the market earlier on, that also led to higher reliability and confidence in the market. And of course, half of the transactions are very short-durated, short-term, less than 1 month. That is something to be worked out. However, it is also a positive signal because from the financial FI's point of view, they can avoid, for example, a quarter-end volatility. And as a result, securities firms, financial institutions, and the brokerage firms were able to enjoy a lot by having that strong infrastructure in place. And for the short-durated OIS, also has a very strong merit to exercise. For example, compared to IIS, it begins with 1 week period. So that can actually reflect the market expectations and also go for more refined hedging. The KOFR OIS rates could be used as a basis for calculating the market expectations into the base rate. Then the OIS would work as a very important channel for communication between market participants and the government. It starts with short term, but OIS would be expanding into longer durated maturities. It would also replace the CD rate. However, there are 2 things to consider. First, for the long-term bonds, I believe that the administered guidance would have to be adjusted. We have a mandatory quota rate of 20% for the longer durated maturities, which means that out of the total share, we have to work to increase the overall target and at the same time focus more on increasing the share of longer durated maturities. And as for the CD rate being delisted from the critical benchmark, and of course that would send a very clear signal to the market. But there are a lot of CD-linked derivative contracts that are still outstanding in the market, and through conversion, there will be a lot of cost and time required. And we could look at the LIBOR incident, if that is any reference point. So this transition has to be done in a very orderly manner. We also need to have a clear schedule, and clear guidelines would have to be made available so that we can ensure predictability, so that by maturity and the CD basis, swap pricing could be set in a reasonable manner, so the existing legacy positions could be liquidated. Not only for the derivatives, but also for the on-spot market, the KOFR would have a very important role to play. It's not just about mandatory transactions. We need hedging transactions based on actual demand. The bank KOFR FRN issuance and KOFR-linked loans will have to become more activated. As for the loan-to-deposit ratio, for the KOFR FRNs, and other issues would have to be addressed in a prompt manner. Second, regarding the open market operation, when we were calculating risk-free reference rate, due to the volatility of the RP rate, we understand that there was a lot of opposition. But if you look at the RP market, it has made a significant improvement in terms of stability. So a lot of concerns have been removed, especially in July. The two-way RP transaction has contributed significantly to market stabilization. And against the base rate, RP rates have become more stable than before. The overnight demand has increased, leading to increased RP rate, but the interest rate spread has become more stable. And with the WIGB inclusion, many non-resident investors are also taking a lot of interest in the RP transactions. When you meet the foreign investors and when you talk about KTBs, most of them look at the terms and conditions of the RP market and also the liquidity levels in the market. There was a lot of attention. Euroclear and Clearstream and other clearing CCPs would continuously be utilized, and their services would be made available in Korea. That will lead to stronger linkage with the global market and also diversification of global investors. And I believe that the open market operation by the BOK would become more significant in the future. Now, KOFR, RP market development is a linkage of reliability and confidence in the market. And as we were able to affirm, once again, the BOK and financial authorities and market participants are all aligned in their expectations. And I believe that we really have a lot to expect from the market development going forward. Thank you. Thank you very much. Chang-Yong Park spoke from a market participant's point of view and expectations as well.
위원이시던 윤성준
Next is Professor Yoon Sung-jun of Dongguk University, also a member of the KOFR Oversight Committee. Now, thank you very much. This is Yoon Sung-jun. Thank you very much for the invitation to such an important event. Now, then, from this conference, what I have felt is that now, for the very important KOFR, now and also how to develop repo market based on KOFR, and also how we can promote the market in general that uses KOFR. And now I'll just like to discuss my thoughts on these two topics. Now, first about the repo market advancement. Now, the characteristics of the repo market as well as the importance, now they have been explained by Dr. Kim Nam-jung. So if I may just sum up, then now some of the characteristics of the repo market in Korea. Now, despite the various efforts, first is the T+1. In other words, the overnight instruments are the biggest, and then also the collateralized securities. Now that would be the biggest characteristic of a repo market, but in the case of Korea, not only that, but also the parties of the transaction, they are also an important factor. And third is, now this was rarely mentioned today, but now in the repo market, the repo being flexibly or to be actively used, in other words, the intermediary would also be very important. And so I believe that these three are the biggest characteristics of the Korean repo market. Now, first, about the overnight instruments having the highest share. Now, this has been eased considerably thanks to the financial authorities and also the other institutions. So they have been able to reduce this considerably. But still, now if there are some events or crises, then there is still a very fast outflow of the capital. So then in order to fend this off, then rather than the overnight products, but so longer term products should be more encouraged. So there should be more institutional incentives to allow the longer term maturities to take place. And second is about the parties to the transaction, which have also been mentioned several times during the presentations. Now in the US, looking at or the other over the repo markets, then there is the market between the major parties exist. And so that is smaller, but then now also between the PD and then also the smaller securities. Now this market, because of the higher risk, they go through the CCP. And now in such a case, then the credit risk is controlled as much as possible through such arrangements. But in the case of Korea, it is all the parties that enter this one market, and as a result, the counterparty risk tend to be higher. And also, when I looked at some of the transaction data, then of course there are different parties in the transaction, but then now in the case of banks, like commercial banks, so in the case of Korea, we have quite a lot of transactions with the commercial banks. So when there is a bank involved, then now there would be higher rate. And then also when borrowing, then the rate is lower. So of course that is something that we should stay away from. But then now where this arises from, so for example, because they are the marginal supplier or the marginal investor, but also this marginal effect. Now that whether that is the market power that comes from the bank's size, or is it because of the stability from the trust funds? So in other words, because of the low volatility. So I did not look into the data to determine what the cause is, but then now again I would say that that is the characteristic of the Korean market. So then in the case of Korea, the KOFR rate could differ depending on who the party to the transactions are, or in other words, who has the bigger share of the transactions in the market. And then now, related to this, then the introduction of the CCP must be discussed. Now, because there are the parties with differing credit rating that all come into this market. So if we are to go through the CCP to clear this, then the impact from the different credit rating could be eased. And also in the U.S. recently, now for the sovereign bonds and also for the repo, then they have made it mandatory to go through the CCP. And although it has been delayed a bit, but then now, I believe that from June 30th, so from 2027, it would be mandatory. In the case of Korea, then, now compared to the U.S., the need for the CCP might be less, aside from the interest rate differential, because now in the case of the U.S., then now because of the by-way transaction and because of the netting effect, they might need CCP more. But in the case of Korea, the netting effect is less. But then still, if there are risks or crises, then CCP still can play the role of stemming the spread of such risks. So again, they would have an important role to play. But then again, now if they are to go through the CCPs, then now there would also be added transaction costs, especially for the smaller parties who could find it burdensome. We also need to find a way to mitigate such burden as well. So now I talked about the Repo market. Next is about the KOFR market. Now, how to promote the KOFR market. Now, of course, this has also been the push by the BOK as well as other institutions, and you could see that, yes, there has been quite a lot of improvement. So as a presenter has mentioned as well, so for example, the FRN has been increasing, and also the OIS transactions based on KOFR is also increasing, and also last week, the CCP was introduced as well. So this could lead to higher transactions in the future, so looking quite rosy. But now then, one question in my mind is now about the KOFR rate and also the spot transaction, especially in the spot transaction, the loans. So then now in the initial stage of the RFR transition, then now the international organizations now that they didn't really think about applying RFR on loans. So in the beginning, it was about having RFRs and the existing LIBOR at the same time. So then in the lend market, in the loan market, then the term interest rate or the term rate based on the LIBOR was going to be applied, was the thinking. So in the beginning, it was not really a concern. But then now more recently, there are talks of having to apply RFR on loans as well. In the beginning, for me, I thought it was negative because now this also has to do with who managed the credit risk. So then KOFR-linked loans, then the borrower's risk, in other words, the credit risk, would be borne by the financial institutions, meaning that they have to manage them. Of course, if they can manage them, then that would be no problem. But then now if there are uncontrollable risks, then such risks would fall upon the financial institutions directly. Then for such financial institutions, especially for banks, now if the banks are to have a threat to their soundness, then this could translate into such a big risk to the whole economy. So then for all the customers, so having the loans linked to the RFR for all the customers might be too big a risk. But then perhaps for the vulnerable groups, for the disadvantaged groups, then in other words, who would find it difficult to individually manage the risks, or for those who are exposed to large credit risk, then perhaps for them, then utilizing KOFR, the RFR, to manage their loans or the rates, perhaps that could be meaningful. Last is about the KOFR-linked futures. So of course we have those from the Korea exchange as well. But then yes, the KOFR futures, the transaction volume is very low. Now when KOFR futures were getting listed, I was in Busan, and I also gave some presentation on what we needed to do in order to promote KOFR futures. So on the day of the listing, I even mentioned that, well, this was going to be difficult if we were to do it this way because we already have the failure case of such futures in the past. And now having listed the KOFR futures, and then now the players from the demand and supply, they are not clear yet. So then perhaps we would repeat the difficulties when listing the CD futures in the past. But then on the other hand, looking at some overseas markets, then how can we accelerate the transactions Now, one could be the linked products. So in the case of Korea, then the sovereign bond market, well, the transaction volume is enough. But then for the 3-year product especially, then the transactions are quite a lot. So then also for the 10-year, the transaction volume has gone up quite a lot. Then the spread transaction between the 3-year and the 7 and the 10-year. So then as a result of this, the transaction volume has gone up quite a lot. So then the sovereign 3-year and the KOFR futures, so maybe we should also utilize a spread so that we can move some of the liquidity to the KOFR futures as well. So that was my suggestion, but I believe that it has not been implemented yet. But I do believe that we need to find more options to further promote the KOFR futures. So for example, I do hope that we can create a futures market based on a short-term rate. So that is all for my comment. So thank you very much. So yes, I can see that, yes, indeed, he was a member of the KOFR Oversight Committee. So thank you very much for giving comments quite specific to the Korean characteristics. So then now regarding KOFR loans and others, so we see that there are some common threads among the 3 panelists, and I do believe that there is going to be dinner afterwards. So I hope that you can all participate in the dinner so that we can continue the discussion.
발표해 주겠습니다.
We have Mr. Lee Nu from Financial Services Commission, Director of the Market Analysis Division. Thank you for the invitation. So I'm joined by 5 experts over here. Back in 2012, as a Deputy Secretary, I want to share with you my experiences from then in relation to what we need to do regarding KOFR adoption and also the CD rate delisting, especially in relation to benchmark rate. I do meet a lot of people from the financial community. We talk about OIS and KOFR, and I ask them whether they know OIS and KOFR, and most of them say they don't really know well, to be honest. And I'm very encouraged by such a large turnout in the audience. So this is really encouraging. Perhaps these are the only people in Korea that would know what KOFR is. But at any rate, I was quite frustrated at the fact that people really didn't know much about KOFR, but then I'm very nonetheless encouraged. So back in 2012, I became the Deputy Secretary responsible for a benchmark rate. Because back in 2012, we had the manipulation scandal over LIBOR. And what became actually more serious is that the CD rate collusion suspicions as well as the COPIX calculation errors occurred in the second half of the year. So while I was serving as a public official for 20 years, I probably had to meet with a lot of people from the National Assembly as well as the media. I guess I was one of the 3 people that had to deal with such calls and complaints from different stakeholders. So why am I saying this? Because back in 2011 and 2012, we talked about RP transactions, activation, and we were pushing forward with the benchmark rate reform with the relevant community, but then it all came to a halt after the problem occurred. But of course, we have the derivatives markets and FRN markets where KOFR is being used more widely since last year. But in 2012, the problem came from the loans market. Now, as a result, as you would understand, in the loan market, there are many sensitive issues to be considered. When it comes to reform or improvement, it's always about accountability. Who did this and why we did that? We weren't able to make any progress back then. So in 2012 was such a challenging year, and I didn't want to go back. But in 13 years, again, I'm coming back to this issue. Now as a general manager, as a manager or a director, what's really giving me a lot of surprise is that we work with the BOK to talk about the benchmark rate in order to replace the CD rate. But as for RP, it wasn't really active back then. So I believe that there was some opposition from the BOK as well as the Capital Market Institute as well as KIF. They believed that we needed to find some other rates. Now, after 13 years, as was mentioned by Mr. Kim, the RP market has really grown significantly, so that's quite a big surprise. Still, in 13 years, we still haven't completed the benchmark rate reform. But nonetheless, Nevertheless, of course, BOK is very persistent in its efforts, making the steady progress and conducting working group activities for benchmark rate reforms, to which I'm very grateful. So in 2013, we had a big issue back then with the benchmark rate. And also recently, a lot of experts, people from the banking community, I do have chances meeting them, and they understand the need for KOFR activation, but they want to pace themselves or pace the development of KOFR adoption. And the CD rates are already utilized very well in the market, and FSC was actually an authority that designated CD rate as a key benchmark. And why are we now coming to terminate the use? So I always say, let's talk about what happened in 2012. There was a suspicion over the collusion of CD rate. Of course, it just ended as a suspicion, but anyway, it drew a lot of criticism from the National Assembly and the media, because the key rates have to be calculated on a daily basis, but certain banks and certain financial institutions all of a sudden said that they're going to withdraw their positions from the market. Because I was a deputy director, I didn't know what to do, especially at a time when we had the suspicions. And if the CD rates are not calculated, how are we going to deal with the repercussions? And of course, we had a law enacted, and CD rates were designated as a legal benchmark, so we wouldn't have similar challenges. But as for LIBOR, where the use has been terminated, we all understand what the problems were. This was also mentioned by Vice Chairman KWON as well. So CD rate is going to be replaced by a reliable rate, and that should be the way forward. We had presentations by the BOK and other people, whether it's FRN or OIS markets. Most of them probably are not something that is well known to general consumers. It is an expert meeting that we're having here in relation to raising the targets for the volume. I don't think there's going to be a lot of backlash from the market, because this is really an area that is open only to experts. But for the lending, the loan market, yes, the KOFR adoption must begin. As was mentioned by the previous speakers and also from the representative from Hana Bank, we need to have the loan market using KOFR, the spot market, so that we can continue to develop. But going back to 2012, if it leads to inconveniences to consumers or any market stress, whether it is BOK or FSC, all these stakeholders have to be engaged and have to find ways to operate the market effectively. Now, in relation to KOFR, I think most of you are responsible for capital market, the money market. Those people that are responsible for loans and lending, other than those experts, you would not necessarily know what KOFR means. And the term itself is quite difficult to understand and grasp for general consumers. And of course, we need to strengthen our communication with the general public to increase the overall awareness of KOFR. Not only related to CD, well, we're looking at KOFR from the point of view of CD, but there are other key benchmarks that are used in the market. We need to have an overall examination. And the benchmark rate related policy measures that we're trying to develop by next year. I think that will have to involve close communication with the financial sector. And thank you very much. Thank you.
한국거래소
Next is Research Fellow Im Sun-young from the Securities and Derivatives Research Center of the Korea Exchange. Hello, everyone. I am Im Sun-young from the Korea Exchange. Now, first of all, I would like to thank Mr. Han-min, Dr. Kim Nam-jong, and also Woo Han-so. Thank you very much for the excellent presentations. And listening to the presentations by the three speakers, I was able to better understand the challenges and tasks of the KOFR adoption, as well as the direction of the money market policy change. Now, as was mentioned earlier, KOFR was calculated from 2021, and since then, there have been a big push toward KOFR with cooperation among the relevant institutions. And for the Korea Exchange, we have also been trying to lay the basis for the KOFR adoption. So we have also opened the futures market based on KOFR. And then also, as was mentioned earlier, on October 27th, we have also started the central clearing for KOFR-based transactions. Now, of course, the futures transactions are not brisk yet, but then now, thanks to the introduction of the central clearing for the KOFR OIS transactions, we are hoping that it could also serve as a turning point for the KOFR-based transactions. And then the next presentation delivered by Dr. Kim Nam-jong about the assessing the stability of the domestic repo market and the institutional improvement. He has also presented important implications. Repo market is an important infrastructure for the money market. In other words, the central clearing to reduce the counterparty risks would be critical. So in some European markets, for the off-the-counter transactions and also for the repo market, now some of them have already required the CCP. So as such, the central clearing in the repo market, this would be one way of enhancing stability in the market. But not only that, it would also go a long way towards stemming the spillover to the systemic risk. As such, looking at the Korean market, which has gotten larger, it is important for us to also refer to the major markets examples and come up with a more realistic and also a more realistic approach for the short term. And also the economist Woo Han-sol talked about the role of the open market operations and also against the changes in the environment, for example, emergence of the stable coin. In particular, the KOFR's role in the market in order to enhance the effectiveness of the monetary policy. So I also agree with this assessment. Now looking at the global market and the RFR, so the derivatives based on the RFR, so we see that such derivative market is already in stable growth. Now, according to the period announced data, then in the first half of 2025, the SOFR futures trading has increased by over 25% YOY, and also SONIA-based futures, so thanks to the swap transactions increase, is also growing overall. And also the Eastern in the Eurozone, then the financial transactions has gone up by a whopping 90%, showing an explosive rate of growth. So again, when we look at the global market, then utilizing the RFR, and then the futures and also options or weekly option swaps. So we see that many products have been developed and are being traded based on the RFR. So I believe that in Korea as well. So after the KOFR introduction, then now with the OIS transaction CCP, and so I believe that we already have sufficient infrastructure to further promote the transactions. But still, we see that the transaction volume still remains low. So especially from the Korea Exchange. Now, in order to promote KOFR transactions, we have waived the fees, and we have also tried to increase the market makers, but still liquidity formation and also encouraging participants into the market has been difficult so far. Now, for some of the reasons, now it was mentioned earlier. So, for example, along with the CD rate, so we still have a parallel rate system and parallel benchmark system. Then also because of the frictional demand and supply and limitations of the participants in the money market. So I believe that some of the structural elements have served as the deterrence against the promotion of the KOFR transactions. So then for the KOFR market to be established and also to become established in the money market, then I believe that we need to have a more organic relations among the policies as well as the institutions and the participants as well. So in addition to what Mr. Han has mentioned in terms of the KOFR adoption strategy, I would like to mention a few more. First could be the mandatory KOFR OIS clearing. So through the mandatory clearing, if the standardized contracts can be concentrated into the CCP, then the transaction period could be reduced, and also the counterparty risks would be reduced. And also because we can lower the unclear transactions, we can also reduce the uncertainty in the counterparty, meaning that we can also promote the inter-institutional transactions too. Now this would then increase the liquidity of the KOFR OIS market, and it would also lead to the greater demand in the hedge trading as well as arbitrage trading, which could then broaden the impact to the overall KOFR market. And also, naturally, then the KOFR and the CD basis swap trading could also be promoted. And as the rate arbitrage transactions increase, then it could also attract more participants into the market, thus accelerating the transition to KOFR. And last, for the participants as well. Now, in the market, it is mostly the banks and the securities firms, but then not only them, but also other institutions like MMF or the pension funds and insurance companies. So we also need to have participation by these non-bank financial institutions as well. And to do that, we can also develop some incentives to encourage their participation. So through the presentations today, it was quite meaningful that we were able to think together about how we can further the adoption of KOFR as well as the development of the Repo market. I do hope that KOFR can be adopted as the leading RFR in Korea. Thank you very much.
예, 좋은 말씀 감사합니다.
Thank you very much for your insightful comments. Last but not least, we have Chun Yu, Head of Securities Collateral Division from KSD. Good afternoon. I'm from Korea Securities Depository. I am Chun Yu. So 3 speakers, thank you very much for your presentations. And our 5 panelists, you have given us a very detailed explanation and also shared your insights related to KOFR. So thank you for that. I'm not an expert on KOFR, but I'm responsible for activities related to, well, actually today I'll talk about Repo market platform. Let me just give you a brief introduction of KSD. We were established in 1974. We're an electronic registry. We deal with, for example, fixed income securities and also the FX. So we do lending and borrowing and provide financing services and overall infrastructure that are necessary for ensuring trading of these different instruments. In relation to a Repo market, 2 organizations are dealing with KOFR. For our securities collateral division, we look at repo transactions in the market. As a third-party redemption institutions, we're responsible for the collateral management for transactions, and transaction-related information will be collated. And that information is given to the RFR, Calculation and Notification Department. With the relevant institutions, the collected information will be used to calculate KOFR. So we have 2 units at KSD that are playing important roles. Now, to speak about the repo market, with the QE underway and also the interest rate reductions taking place, the repo transactions for the last 3 to 5 years have grown rapidly, about by 20% per annum. And as of yesterday, interbank repo market is about 20 trillion. And also the BOK has an open market operation. It has a certain limit for the transactions per day. It's 22 trillion yesterday. And also the securities, instead of receiving the instruments, they would actually be transferring those repos. So that's about 100 trillion won in total. So the total market size for the repo is about 400 trillion won. As for the per daily volume, it's about 200 trillion a day. We don't use the term quadrillion, but just by looking at the repo market volume alone, it is over 8 quadrillion very big size market in Korea. It's a huge market indeed in terms of the trading volume. And in the case of repo, the short durated or, for example, CP, you have to think about the counterparty risks. And of course, the credit rating would be high because we're dealing with the banks, but it's non-collateral transactions. So in terms of stability, this is very much subject to the government policies. The market has been growing very rapidly. And of course, this market is accounting for a big share in the short-term money market. Now, against this backdrop, the repo market is growing very rapidly, but it is also associated with certain issues. But we'll just talk about the differences with other major economies. So, for example, in Korea, through the brokerages, the repo market accounts for more than 90% of the total repo transactions. But overseas, you have dealer system that's already very active in those countries. So various FIs would be able to manage their risks related to counterparties because they cannot do that directly. So the dealer would be bearing such risks onto themselves. And the dealers, together with the credit ratings, would actually restructure the instruments and also to lend out to hedge markets, leading to an active development of the repo market. But as for Korea, we have lots of cash-driven transactions in the repo market. So rather than utilizing securities, but securities would be used as a collateral to raise funds. So the pivot of the market is quite different, especially compared to other economies. So given such differences between the Korean market and overseas repo market, and even with such differences, Korean market has been growing quite significantly. We believe that we have actually achieved economies of scale, so we have to now talk about and to focus on qualitative growth of the market. And the momentum has really gathered force. Looking at the overseas best practices, we have to find a way to import this to the Korean market. We may need to operate a consultative body. And when there are, for example, financial instrument transactions or repo transactions, there's no guarantee that it is going to be settled. There's also default risks that occur. And depending on the transaction practices, such problems would be addressed automatically. But in Korea, we never had the default cases. That means that the settlement, the payment, would be processed no matter what. It would be netted. So it's a simultaneous payment through the financial network, but then it would go through the commercial banks network and where the settlement takes place. So if there's, for example, lack of funds, the intermediaries would take a lot of effort to ensure the matching between demand and supply, and that's how the market is operated. And whether such practice is sustainable, whether such treatment of the funds would be sustainable, there's a fundamental question asked in that regards. Next year, KTBs, MSBs would be included in WIC-B, which means that there would be a significant inflow of investment into KTBs, Korean papers. Through the omnibus account, there would be investment made, but at the same time, and also transactions between domestic FIs will also increase. And also, the differences with international practices would have to be considered. Another point I want to raise is regarding the repo transactions because they are mostly driven by cash. GCF as a financial instrument, repo transactions have really not been made so active because they're mostly T1 overnight transactions. We have less than 10% for the longer term maturity, and 90% are overnight instruments. So they're mostly just for raising funds. So it could help in terms of calculating repo because we can reflect the liquidity, but in terms of stability in the repo market, longer durated instruments would need to be utilized more, and we need to have different types of transactions. Not a specific collateral, but a general collateral like GCF. Such trading would need to expand. And what are some of the ways to increase transactions utilizing general rates? This has been said over and over again. Dr. Kim also mentioned this rightfully regarding the transaction information. There should be more sharing of transaction-related information among market participants. We have RP Inside, which is a website that we operate, and we actually opened this in May this year. Once you go to the RP Inside, you can look at the funding rates by different sectors and the leading benchmark rates of different economies, and also transaction volume, trading volumes could be checked. And for those institutions that are subscribing to KSD, you could also see the analysis results, the differences between the rates that you use and other benchmark rates. Once we are able to address such information asymmetry, repo rates will be formed more transparently and also fairly. Next, lastly, CCP. Dr. Kim's paper also addressed this point. In the current repo market, we do not believe that there would be much significant impact coming from CCP in terms of reduction. There is also a fulfillment obligation, but until the settlement date, the whole process is not managed, but it is actually managed by the redemption party. Repo is being managed stably compared to other short-term money market tools. And rather than unilaterally just introducing a certain system, we need to understand that it could lead to, for example, cost increase and also increased burden in terms of workload. So it is very important to bring consensus among market participants. I was not able to address KOFR point, but I wanted to address my talk regarding repo and the market development. Going forward as well, as an institution for KOFR calculation and repo sales institution, we will play a very important role in developing the relevant market. Thank you very much. We actually have a lot of questions coming through the website, but as a moderator myself, I will just focus on the key questions. Why don't we take a look at the questions here, and if any other panelists would like to chime in? Okay, so this is the first question.
So about the CD rate and what would be the impact of CD rate being excluded from the major indicator. Now then, considering the impact and the timing of the de-designation and also how we approach that would be important. So what would be the response to this? And then the second is about the CD determination roadmap. So I believe that this is a related question. So then who will be responding to this question? So then perhaps Mr. Han-min. Right. So I would say that yes, the termination of the CD, then yes, when it will happen, and also the approach, and also the prior notice would also be important. Now, in terms of the timing, I believe that what we need is market consensus. So then, as we could see from the examples of other countries, so now it's not that we say it and then it's done. It's not doesn't work that way. So of course, that there are a lot of legacy contracts, so we also need to understand them and also the maturity left in those contracts. So then perhaps at least 3 years or 1.5 years to 3 years. would be the time that we need at least. And also for the countries that are transitioning to the RFR, then we also need to have some discussion with them as well. So then it is important to have some prior time to make the preparation, also for the participants to be ready as well. So of course the timing is important, but also we need to give ample time for the institutions to also reduce their legacy contracts. So for example, the KOFR first initiative, so like the RFR first initiative. So then for the new contracts, then we would also recommend the usage of KOFR in the new contracts. And of course, in terms of the timing of the announcement, then of course we would give some prior notice, and of course we would give specific guidance on what can be used for what contracts or what cannot be used for certain contracts. So we would also provide such detailed guidance as well. All right, thank you very much. And also, as was the question was asked, so then of course the CD termination, then when will this happen? So in other words, the timing, and then also in terms of the CD rate, then also this yield. So then what is going to happen to that? How are we going to make the calculation? How are we going to disclose this? So all these approaches involved, I mean, it is also very important. And also looking at the major countries' examples, then they would come up with very clear roadmaps. So as Mr. Han has mentioned, so 1.5 years to 3 years prior, they would come up with very detailed guidance so that the market will be able to voluntarily go through a very smooth transition. So I believe that this type of nudging would be very important. And also, as Vice Chair Kwon has mentioned earlier, so in the first half of next year, the CD rate would not be included in as a major benchmark anymore. So he also mentioned that a clear roadmap would be announced as well. So then now we would continue to work at the working group to discuss how and when the CD termination will occur, and afterwards what should be the clear direction. So yes, there will be such a clear communication to come. All right, thank you very much. The time is almost up, but we shall take the response for one last question.
있긴 한데요. 어쨌든
This may be a very challenging question, but perhaps we can talk about the direction. Now, you said that we need to have KOFR linked loans, an overnight rate, because we're not really familiar with developing certain instruments. Could you specifically talk about the interest rate calculation methods? Perhaps not so much related to the methods, but what are some of the concerns that we have? So let me address you on that. This is a new product that we don't really have any experience with, so it may be an unfamiliar territory. It's an overnight rate, but the rates would be adjusted every month. So each rate would be calculated on a compounded basis, accounting for the month rate. So let's say that you have a 1 year FRN to get a loan. Now the bank, when they issue the 1 year FRN, now you had a daily rate that would be compounded, and then you get the interest payment done at the end of that month based on a compounded basis. So from this point on, for the next 12 months, the KOFR rate used as a basis, and then you would be paying that interest rate later on. So let's say that you have JAG, and then you made that loan. Basically, it's in advance, so looking at the backward historic average. Now, you would have to determine the interest rate, the fixed rates. So you look at the past 1 month. Daily rates calculated based on a compounded basis and paying that in 1 month's time. So from the point of view of banks, they would be paying the KOFR rates in 1 year, and then minus 1 to 11 months, the rates would be used as a basis for receiving such loans. So there would be a 1 month mismatch. However, the bank is not only dealing transactions with only one counterparty. There would be many other counterparties, and it would be netted against one another. So it would move quite similarly to the moving average in a way. Okay, so we have wonderful questions, but then in the interest of time, we will have to finish our discussion at this point. So we apologize to you. So in terms of diversity and expertise, the organizers have invited great experts and panelists. Yes, do we have a final comment?
말을 말이 많아서 죄송한데 끝나기 전에 사실 한국은행이라 우리 공대희 부장하고 한민 팀장이 말씀드렸지만 이 모든 일은 지금
Of course, Mr. Han and also Mr. Kong and others have mentioned this, but then now we also have Director Lee Nuk. Now he has been observing this for over 10 years, but so I believe that what is the most important is that now overall, I believe it's like introducing a new traffic light. So there's the old traffic light, and now we're introducing a new traffic light. And I would say that for the new traffic light, what would be the most important is that now this is an internationally better known traffic light, and now as the financial market continues to globalize, and it is important for us to adopt a new traffic light. But then now for me, the biggest concern is that now in the past we just moved to the new traffic light. Now it did not exist before, but now we are working toward it, and now it's like 10%, 20% introduced. So then now we continue to work, and then now let's say we have 50% old traffic light, 50% new traffic light. That is going to be such a big confusion. So if we are moving toward the new traffic light anyways, then now as was mentioned earlier, like Mr. Kwon and Mr. Han, now maybe they can study how the overseas markets have done this. But then now, how these traffic lights can coexist. So how long they can exist. Now I believe that that is something that can be determined by the Financial Services Commission. So I thank the Vice Chair for coming today. But I believe that the longer we have this parallel system, then the longer the confusion. And also now for WIGB, then now how the derivatives are going to be invested in Korea, and also the overseas, so the foreign investors, so they would also be coming into the Korean derivatives market. And now they might say that, well, the CD rate is the benchmark rate in Korea. So if they become accustomed to this, then it will be made even more difficult to move to KOFR. So as was mentioned earlier, so I believe that it is important that we move to the new traffic light as early as possible. And for that, the role of the Financial Services Commission would be all the more important. Thank you.
네, 이것으로 토론
Thank you very much. And this concludes our panel discussion. Thank you for your participation. Thank you, Professor Park, our moderator, and our 6 panelists. Thank you very much for your efforts. Now, this brings us to the end of the BOK-KIF joint conference. Thank you very much. BOK and KIF will continue to provide policy suggestions and a venue for discussion. We would like to look forward to your continued participation in our next events. Thank you very much. Make sure that you take all your personal belongings with you. Thank you.
오늘 참석하신 분들을 위해 소정의 답례품을 준비하였습니다. 돌아가시는 길에 잊지 말고 하나씩 받아가시기를 바랍니다. 또한 만찬장으로 가는 버스가 오후 5시 10분 1층에서 출발할 예정입니다. 만찬에 참석하시는 발표자, 토론자 분들께서는 한국은행 직원의 안내에 따라 버스에 탑승해 주시기 바랍니다. 그러면 조심히 들어가십시오. 감사합니다.